Welcome from beautiful downtown Fremont, California. I'm Ron Cohen, a tax partner with the firm of Greenstein, Rogoff, Olson & Company, CPAs. This is our weekly tax update. Last week, the most important thing that happened was the announcement of a second voluntary disclosure program for people with offshore hidden income. I'll just read the first paragraph of the announcement from the Commissioner of the Internal Revenue Service, and then we'll go into the background and educate you a little bit about why this came about and some of the history. From the IRS National Office in Washington, D.C. on February 8th, 2011, the IRS issued an announcement today for a special voluntary disclosure initiative designed to bring offshore money back into the U.S. tax system and to help people with undisclosed income from hidden offshore accounts get current with their taxes. The new voluntary disclosure initiative will be available through August 31, 2011. Now, unlike the prior voluntary disclosure program in 2009, where you only had to identify yourself as someone with an issue by the deadline, under this program, you have to actually finish the preparation of your amended returns and make all the tax payments by August 31st, 2011. So how did we get here? Well, folks who have accounts offshore may be familiar with Schedule B on the Form 1040. In Part 3, you're supposed to X a box, yes or no, if you have a foreign account, if they're more than $10,000 in aggregate, all your foreign accounts added up together. If the answer is yes, you check the box yes, and you also write in the countries, the names of the countries where those accounts are kept. If you have over $10,000 in aggregate in foreign accounts, then you have to go to this form, your report of foreign bank accounts, TDF 90-22.1. In this form, it's due by June 30th. It has to be received by June 30th, not just mailed. There are no extensions. There's no electronic filing of this forms. And you have to read the instructions carefully to fill it out correctly. You have to put your name, your address, your social security, your birth date, whether you're a citizen or have a U.S. passport. You have to put the name of the bank account, the bank's address, what type of account, bank, securities, or other type of financial account. And you have to sign it and send it in to an IRS office in Michigan, Detroit. This is from the Department of Treasury. They help to track money launderers, drug dealers, and terrorists with their financial transactions, but everyone with over $10,000 in foreign accounts must file this report. If you don't, there are penalties. And these penalties range everything from $500 for a simple violation to, if you have a willful, knowingly false filing of this form, the penalty can be $100,000 per violation or 50% of the account value. And if the case goes criminal, it can result in 5 years in prison. Well, in this second voluntary disclosure program, the IRS announced on its website with this page here, where you can click through, as we're showing on the screen, to the details of the program. Here's the home page on the IRS website, and it takes you to the frequently asked questions. So to get to a quick summary of the situation, frequently asked question number 8 goes right to the heart of the matter. The taxpayer had $1 million in an offshore account. It earned 5% interest a year for 8 years, 2003 through 2010. $50,000 a year, 8 years, that's $400,000 of unreported offshore income. When you go through the calculations, the tax on that is $140,000. The 20% accuracy penalty they're charging is $28,000. And the FIBAR penalty for not filing this simple form that requires no tax due would result in 25% of the highest account value over the 8-year period, resulting in a penalty of $350,000. So on $400,000 of income that was not reported on either your income tax return on Schedule B or on your FIBAR report, the tax penalties are $518,000 or 130% of the income you earned, plus interest on that amount. If you don't come forward with this program by August 31, they promise, 1, they may pursue criminal prosecution, and 2, the tax, interest, and penalties could be as high as $4,543,000. Please read through frequently asked question number 8 if you're in this predicament. If you don't come in under the voluntary program, you not only are subject to review, penalties, tax, interest back to 2003, but they can go back to prior years because you didn't participate and come in with the program. So I've put together this little schedule, which we'll show on the screen, that goes through the computation of that you owe the tax. You owe a 20% accuracy penalty. You owe interest on the unpaid tax, and you owe 25% FIBAR penalty for not filing the FIBARs. There is an exception with this program that the penalty for the FIBAR non-filing could be as low as 5% or 12.5% if the accounts overseas were less than $75,000. 5% penalties apply to accounts where perhaps you inherited an account, knew nothing about it, and end up in this situation anyway. If you have trouble with foreign offshore accounts, call an attorney, call a CPA, work together as a team, and get this resolved, because the IRS promises to pursue these issues even more aggressively in the future. Now, when you first contact the IRS with a foreign offshore account issue to enter the voluntary disclosure program, you will immediately self-incriminate yourself. You're calling the Criminal Investigation Division of the IRS. Those are people that I have not dealt with in 30 years. Those are people that wear badges and carry guns. And in your first contact, you'll be asked to fill out this document where you will actually incriminate yourself and plead complete guilt, having to disclose all the information about you, the account, who put you in the account, the amounts each year, and you can't move forward in the program without making this full disclosure up front. So let me get into a few more details. With voluntary disclosures of all types with the tax system, the rule is that you get to them before they get to you. If you come in first and volunteer the wrongdoing, then you've been voluntary. You show good faith. You'll get penalized, but you will not usually go to the criminal side of the house and be subject to criminal prosecution and perhaps jail time. If they get to you first, either because your account's been disclosed in the case of UBS in Switzerland, that's the case right now. Thousands of taxpayers are being disclosed, their name and account number, to the IRS, or you're under audit because some other reason they found out about the offshore account, then they have to make an example of you and charge you with the maximum penalties in frequently asked question number 8. That's how you get up to $4 million on a $1 million account of tax, interest, and penalties. If you filed a joint return, these rules apply jointly and severally. It's not just you or the wife who may know about the account who's in trouble. The IRS can go after the taxpayer, their spouse, or both, wherever the money may be, and both can be subject to criminal prosecution. As I said, the case starts with the Criminal Investigation Division. You'll incriminate yourself immediately. You need a lawyer. This is not a do-it-yourself project. Get a good team behind you. You'll have to disclose who put you in the investment. And you just don't, as some people have tried to do, they've tried to fill out the unfiled tax returns and FIBARs and send them in quietly to the IRS Service Center here in California. It's Fresno, California. That is not entering the disclosure program. So if you file all the back returns, of course you'll pay the tax, penalties, and interest, but you will have not relieved yourself of possible criminal prosecution. In fact, you may have made the situation worse because you tried to backdoor the IRS, so we definitely do not recommend that. In fact, the years before 2003 are completely still open because you're not coming to the IRS through the voluntary disclosure program as they've laid out in the frequently asked questions. Now, the IRS commissioner promises this is the last program that they will allow. The prior program, the penalties for underpayment were 20% of the highest account value over the prior 6 years. Now it's over 8 years. And because you waited to the second program, the penalty is now 25% of the highest account value for not filing the FIBAR. They promise this is the last round. Okay, if you have unreported offshore income, call us, call someone. Don't do this yourself. The tax, penalties, and interest will only get worse. Don't call the IRS by yourself. And this is the way you have to protect your rights and possibly your freedom from jail time. You absolutely need a tax attorney if large amounts are involved. Well, there's a lot more to it. I refer you to our website where the links are to the IRS website, and the frequently asked questions, which go on for pages, should be read by anyone in this situation in preparing on how you enter the program and perhaps come out at the other end with your taxes and penalties paid and then become compliant. Please call if you need any help. I'm Ron Cohen, the tax partner with Greenstein, Rogoff, Olson & Company here in Fremont, California. Thank you for watching.